It's time to do business again. Updates from the world of business. That's what we do on Business Incorporated. And here's what we have prepared for you. Revenue of Suez Canal is up. It hit $39.9 billion over 6 years. In Ghana, it costs less now to produce. Producer inflation drops to 24.4%. And in 9 months, Ethiopia has made $2.1 billion from gold exports. Good afternoon, everyone. I'm Ini John Mekwa. Let's do business, starting from the global space. Oil prices extended gains on Thursday on the prospect of tighter supply after Washington imposed further sanctions to curb Iranian oil trade, and as OPEC producers have pledged further output cuts to compensate for pumping above agreed a quota. So we see 39 cents added to Brent. So that's about 0.5% to $66.19, same as we had in the morning. WTI also up this afternoon, 0.7%, $62.91 a barrel. Both benchmarks settled 2% higher after their highest levels since April 3, and they're on track to also record bigger gains for the week. President Donald Trump, we know, issued sanctions yesterday restraining Iran's oil exports, including against a China-based Teapot oil refinery, ramping up pressure on Tehran amid talks on the country's escalating nuclear program. Adding to supply concerns, the Organization of Petroleum Exporting Countries said that it has received updated plans for Iraq, Kazakhstan and other countries to make further output cuts to compensate for pumping above quota. Still, OPEC, the International Energy Agency, and several banks, including Goldman Sachs and JP Morgan, they cut forecasts on oil prices and demand growth this week as U.S. tariffs and retaliation from other countries have thrown global trade into disarray. The World Trade Organization said it expects trade in goods to fall by 0.2% this year, and that's down from what was previously expected of 3%. Still in the global space, gold prices eased also as investors booked profits after bullion hit an all-time high earlier in the session as restrictions on chip sales to China and continued tariff uncertainty increased demand for the safe haven. So it's all red this afternoon. Spot gold is down 0.1%, $3,339.37. 0.2 drop is what we have for U.S. gold, still around 3,351. And spot silver lost 0.5% to settle at 32,043 cents. Platinum down 0.2%, $965.46 an ounce. And palladium is also down almost 0.5% to $958.26 for an ounce. And we know, marking another escalation in his disputes with trade partners, U.S. President ordered a probe into potential new tariffs on all critical minerals imports on top of reviews into pharmaceutical and chip imports. And chip gold, we know, is a hedge against political and economic uncertainty, and that's why we've seen the metal, the green metal, the yellow metal surge in the last couple of weeks. Now, the African Development Bank Group is preparing for its annual general meeting that's slated for May 26 to 30, during which the president, Dr. Akinwumi Adesina, is expected to hand over at the expiration of his tenure. One of the candidates for the presidency, Dr. Samuel Maimbo, was a guest on Business Morning and shared some plans for the bank if he succeeds Dr. Adesina.
Tariffs are one point in a long series of value chain decisions that are made. It's the decision about what products you emphasize within your regional bloc. It is about how you negotiate with other blocs, and how you and here I'm not just talking about the blocs on the continent. I'm actually referring to the blocs globally as well. The rules of global trade are being rewritten as we speak, and it is absolutely essential that we have a strong African Development Bank representing and working with governments today and negotiating and making sure that Africa's voice, Africa's seat at the table is strong. This is also a reminder that economics and economic development is also a political process, which is why it was important for me to go and meet with the African Union chair, congratulate him on his appointment, and emphasize that in my view, the African Development Bank and the African Union are two sides of the same coin that must work together to tackle some of our most challenging, most significant challenges that we face today. Inevitably, we must grow our economies. We must make sure we're not leaving anybody behind, not women, not young people, not anybody who has been affected by conflict on our beautiful continent.
The Nigeria Sovereign Investment Authority has announced that it has secured a net asset value of $2.8 billion as of December 2024. Giving this breakdown during a meeting in Abuja, the managing director of the authority, Aminu Umaru Sadiq, explains that the feat is as a result of its resilience.
All the way from February, when we set up Green Guarantee Company alongside FCDO, alongside GCF, alongside Norfund and USAID, through to December, when we were selected to host our peer sovereign wealth funds, our peer African sovereign wealth funds in June of this year. It has been an action-packed year. You can see we made progress on ARENA. You can see we launched our Ministry of Health Oncology Initiative, where we are trying to build one oncology center, world-class, in each zone on behalf of the government. Where we signed groundbreaking MOUs through Ripple, Renewable Investment Platform, MPI, Price for Innovation. The entire year was action-packed in terms of the infrastructure space. On our results, you can see both on a core basis and on a non-core basis, the increase of our returns in 2024 relative to 2025 has been significant. Where we were at 165 billion in terms of core TCI in 2023, we are at 407.9 billion in 2024. This increase of 150% on a core basis. So when you strip out the impact of FX gains, you can see that even on a core sustainable basis, we increased our returns by 150%.
To sub-nationals now, Taraba State Governor Agbu Kefe says his administration is taking the right steps to change the narrative of underdevelopment and put the state in its rightful position of development. Governor Kefe was at an event to inaugurate the State International Investment Committee, and he says the move became necessary in view of the state's abundant yet untapped natural resources that require proper harnessing.
For the first time, the Taraba State government is making plans to organize an international investment summit to market its homegrown talents and technologies, opportunities in mining, forestry and industrialization, among others that abound in the state. The committee, led by Ndudi Elumelu, a former member of the House of Representatives, is also aimed at placing the state on a global map to attract local and international investors, even as it reveals that the event is coming at a time when Africa is in dire need of economic rediscovery.
I sincerely commend Governor Kefe for setting the pace with his vision, foresight, and ingenuity in repositioning Taraba State as a trade center in national economic renaissance, as evidenced in his massive strategic investment in infrastructure and development of productive prospects in various sectors of the economy in the state.
Governor Agbu Kefe, while inaugurating the committee, described the state as blessed with natural resources, which makes it a hub for investors and capable of transforming the state. According to him, the summit will stimulate economic activities, boosting domestic and foreign direct investment.
Our state is poised to be a leader in sustainable development, and this summit will serve as a powerful platform to showcase these strengths to the whole world. The success of this summit therefore hinges on the strong cooperation and seamless synergy among all of you that we inaugurated today. is paramount that we work swiftly and efficiently. I urge you to leverage your unique strengths, maintain open lines of communication, and operate in the spirit of unity and collaboration. Let us set ambitious milestones, support one another, and go all out for excellence at the very top and every step we take. Our collective effort today will pave the way for the Taraba Investment Summit to become a landmark event.
The governor believes the summit will be the beginning of a unique turnaround that will transform all sectors of the state's economy.
That's efforts from the subnationals there. But for this afternoon, let's see one of those commodities affected by tariff. I'm talking about steel. We know how important that is in development, a critical input in construction, real estate, and almost every major input. Now, the tariffs are on. And Nigeria, of course, is caught in the Middle East as with other developing countries. Let's have this conversation now with Ajibola Ayodeji, joins us from Lagos. Hi, Ajibola, good afternoon and welcome to the program.
Good afternoon, Hini. Thanks for having me.
So, I mean, I guess it's just common to say that as with other commodities, steel has also been affected by this trade war going on globally. What's happening to its supply and price at this time?
All right, thank you. I would like to say this, that China is the largest producer and also largest consumer of steel in the world. So whatever happens to the price of steel will affect global price generally, because in 2024, China contributed, China portion of consumption was like 49% in 2024, and they are trying to increase the percentage to like 54% this year. So over the year, we have seen that price of steel has decreased by around 74%. It has decreased by 74%. But now we are seeing that because of what happened in China, there was a policy that they put in place, I think in 2020, that brought about a downturn in resident property market. But now the drag has moderated, and they are trying to invest more in manufacturing and green energy, like electric vehicle and solar panels and some other things. So they are saying that one of the projections according to EIU is that they are going to increase their consumption of steel to like 1 billion tons this year. So this will reduce the exports the number of steels, or the volume of steel that is exported to other countries. And if there is the reduction in export, then there will be increase in the price of steel. And also Japan also is trying to increase their industrialization and urbanization, which we have to do with steel. So Japan is the second largest. So if all these things put in place, and they are also using steel that they are producing in their country more, we are seeing increase in the price of steel. Then coupled with the tariff threat that we are seeing now, so we are expecting price of steel to go up in the world, and this will actually affect Nigeria, because Nigeria import, most of the steel used in Nigeria is being imported from other countries. So the import still contribute like 80% of the steel that we're using in the country is import. So if the price of steel increase in the world, it will also affect the price of steel in Nigeria. So the construction cost will definitely increase as the price of steel increases.
Yeah, well, that's very directly connected. But what's happening to our Ajaokuta steel? I guess that's supposed to help us reduce the imports.
Yes, but then because over the years since the Ajaokuta steel, we have seen that Nigeria has invested like over $8 billion in it. However, we have not seen the effect of the investment that we have seen in it. And one of the problem that contributed to it is, I would say, that is discontinuity and policy inconsistency. When the government comes in, they forget about what they are supposed to do. Like there's no continuity in infrastructural development. That's one of the things. Another thing is infrastructural deficit. And when I talk about infrastructural deficit, I will talk in place of electricity or in place of energy. In place of energy. The energy we are so, Nigeria has become a laggard when it comes to energy, and the poor road networks also contributed to, even though Nigeria have iron ore, to transport it from where it is mined to the steel industry, to the steel where it will be produced, to the steel industry where it will be produced is another thing. So those are the things that are contributed to it. However, Nigeria can be able to have to get self-sufficiency if we are able to move from making promises to taking actions. We will be seeing self-sufficiency in still something.
All right, so we hope that we'll get to that place of self-sufficiency soon. Thank you so much. Ajibola Ayodeji, analyst with Financial Derivatives Company.
Thank you. Thanks for having me.
All right, now let's take a break. When we come back from that break, we head to the markets. And of course, a whole lot happening on the continent. We'll tell you about it here in Business Incorporated. Please stay with us. Welcome back. Still watching Business Incorporated here on Channels Television. We head to the markets now with Will Ibon. Will.
Yeah, Ini.
We're back.
We're back in the green. Definitely a good one for the NGX. When I say we're back, I'm not just talking about every market, the NGX in particular,
yeah,
because we've been
charity begins at home. So
yes, we start with the domestic equities, and we're seeing that recovery. You know, we saw yesterday post dividend markdown, a lot of banking stocks, plummeted, and that caused the NGX ASI, the all-share index, to go down yesterday. But we see the recovery in this banking stocks, and we see.
Yeah, but let's not get too excited, because I remember, I think earlier this week I had a positive intraday, and by close of trade we were back. So
I just want to keep that optimism, for today.
All right, investors are listening.
So Good Friday, and we just want to carry on that green sentiment.
Don't forget that you have Friday, Saturday, Sunday, Monday. So investors may want to take some funds to use for the...
But I think they would just want to let it just,
okay.
Wishful thinking, right? Let's see how major equities we track in Africa perform. We started with the NGX at intraday. It was in the green, mostly negative for other major equities, but we see Nigeria's NGX at intraday rebounding from Wednesday's negative performance, and this is driven by gains in the banking sector. Stocks declined yesterday post-dividend markdown, but let's look at JSE. South Africa is down at intraday 0.36%. Let's look at Egypt's EGX. It was also trading down 0.25% at intraday. Also, the Nairobi Securities Exchange closed Wednesday's session in the red, 0.78% to be precise. Now, let's turn briefly to activities in Nigeria's fixed income market. Chuka Nwachukwu, Chief Dealer Group Head of Trading at UBA, joins us this afternoon. Good afternoon, Chuka. It's good to have you on the program. Chuka, we'll be looking at a lot that's happening in the fixed income market, especially with Treasury bills and the auction, the DMO coming with, more auctions than planned. But we also saw a decline. Let's just kick off with liquidity. We saw a decline in market liquidity by 395.45 billion naira yesterday. How would you assess the current liquidity conditions, and what impact could this have on the broader market?
Thank you, Will. Good afternoon. The liquidity, like you rightly mentioned, has been pretty tight. Though we've seen, unlike the previous months, between January to March, it was very, very bad, in terms of liquidity. But April has not been so bad. So we, like you mentioned earlier, the system liquidity is a negative of over 300 billion. It will also be more affected again today because of FX settlements. However, we are hoping that respite might come if FAC is paid this week or next week. We might see a bit of respite. So that has actually affected activity in the fixed income market as well, because whatever happens in terms of in terms of liquidity, it greatly affects the fixed income market, either positive or negatively.
Okay, let's look at other drivers here for market activities. We see inflation rates, the latest inflation data climbing for March, climbing to 24.23%. And this is the first monthly rise in inflation rates since the beginning of the year. And then we look at, you mentioned FX, but Nigeria's, the Naira's recent performance hasn't been so great. How do you see these economic indicators especially influencing the central bank's monetary policy decisions for yields in the next meeting in May?
Well, we've seen the inflation figure increase more slightly. The last inflation figure came out at 24.23, like you rightly mentioned, from 23.18, and that's slight upward movement. However, if you drill down to the core indices, the food inflation, with somewhat give people a bit of hope because it wasn't as bad as the previous month, and so that obviously tells that moderate decline in terms of food inflation is there. However, the core corporate, which is the FX inflation, is still there, as well as the fact that the oil price is also one of the major factors affecting the price of the rate of FX, and so we've seen decline in oil price, and this automatically will affect affect the market because our major source of export is oil. So on the CBN, what CBN will likely to do, CBN has always maintained the stand of price stability. So in the last MPC meeting, all parameters were held. And so we thought that, going into the next one, which is in May, probably there might be a slight adjustment in the MPR. However, with this inflation figure that had just come out negatively, I think that we should wait to see what the inflation figure for April will be, and that way, it will be clearer what CBN we intend to do in their next MPC meeting, which is in May. And then I believe that if the figure is is an increase, just like in March, then CBN will probably respond, just as they responded in the previous months.
So you mentioned price stability. Do you think the CBN, that the central bank, will be able to achieve this, especially with the U.S. Fed saying that inflation may be tougher to control now, especially with the global tariff tensions? If we have instability in the U.S., especially with their inflation, how is that going to trickle down to Nigeria, especially that, our country is mostly we source FX, mostly of our transactions, imports are done in the dollar. So how is this going to really impact yields in the fixed income market and in the markets in general?
I think that the tariff war, is also starting to have its effect in our market. If you've seen that, the last NTB auction, we saw that DMO offered 800 billion, and then about 426 billion, 24 billion was sold. So you have, for once, we throughout this year, we've seen that the DMO is not overselling, or rather, sold exactly what they offered. So that's an indication that some of these things is going to be affecting our market. So for the fixed income market, going into the Easter holiday, we've seen a lot of activities on the longer end. That was the 1 year. The 1 year came out at 19.63. It's currently trading around the 18 levels, and then lower, upper 18, and then lower 19 levels. So it's going to trade this way till after the holiday. On the bond side, we've seen interest in the 2029 bond as well as the 2033 bond. So these are the two bonds that investors have greatly shown interest in, and so we've seen that the yield on these two securities have actually declined slightly. And so with the effect, obviously, is the tariff war is affecting the economy. And then also, don't forget that the another negative effect on this tariff in our economy is the fact that prices of securities, for example, will also be the tariff, which is, I think the U.S. government placed about 14% tariff on Nigeria. So that investors will also factor that into investing in our market. And so gradually to have effect. We've seen the effect also in the oil price. This also will affect demand on the FX, because I mean, if we're not if the oil prices drop from $77 to about $55, then obviously it will affect our our input. Don't forget that we are not even producing enough. We're meant to be producing about 2.2 million barrels a day. We're currently producing less than 1.5. So all these factors will continue to put pressure on the naira. However, I must say that the CBN has greatly intervened. They intervened throughout last week. They've also intervened this week. That has also helped to moderate the demand, and then we've seen the exchange rate remain stable between 1,500 to 1,600. So by and large, all these factors will definitely affect our market going into the Easter holiday and then after.
Okay, speaking of Easter holiday, today is final trading day. What instruments are investors looking at currently?
Yeah, like I mentioned earlier, the 1 year, which it came out at 19.63, is currently trading around the upper 18 level. So that's on the treasury bill side. There are also some interest on the OMO side as well, but the major interest so far this week has been on the 2029 bond and then a 2033 bond. So those bonds are quite lucrative, and then investors are also looking to to take advantage of the high yield now, because I mean after this period we'll begin to see decline in yield, and obviously that will affect investors' demand and then investors' appetite.
We would not want to see that happen, but it's the market. Thank you so much, Chuka Nwachuku, Group Chief Dealer and Group Head of Trading at UBA. Thank you for joining us this afternoon.
Thank you. Thank you.
So let's move on to the Middle East now, where most major stocks in the Gulf fell in early trade. That's today, as uncertainties around the U.S. tariff policies and fears of an economic slowdown remain top concerns for investors. Look at Dubai. It was the only gainer we saw there, 0.07% up. Abu Dhabi was down 0.03%. Saudi Arabia, we saw that 0.59 decline, and this was weighed by stocks in the power and mining sectors. Qatar also down 0.61%. Looking in the U.S. now, we see S&P 500 futures and the NASDAQ futures rose in pre-market trade on Thursday, as we see a recovery in most of the stuff there. Dow Jones, however, was down 1.36%. If we look at what the boost is coming also from Taiwan semiconductors, strong earnings, but overall sentiment remains cautious. Fears are that inflation, global tariffs is going to take place and weighing on investors trading. Let's look at Asian markets very quickly. We see the Nikkei recovering despite U.S. tariffs. You see it's up 1.35% in Japan. Kospi is up 0.94%. The Hang Seng Index is also up 1.61%. And when we look at mainland China, we see that also up slightly 0.13%. And this is coming after the central bank's decision to hold interest rates at 2.75%. That's in China. Look at India. The Nifty 50 is also up 1.77%. Any markets are green in Asia. We're, happy. No more tariff. Well, not that there's no tariff concerns, but I think they're ignoring tariff.
I think you should be careful once you mention the word tariff, because President Trump could hear you and decide to do something with the tariff.
Oh my goodness. We don't want another tariff for you.
All right, Will, thank you so much. All right, now let's head to Europe, and first we'll tell you that the cost of borrowing on the block is now smaller. There's a cheaper fund for the 20-member euro area. And this is the third time that there's going to be a cut in their interest rate. So this afternoon, the European Central Bank has decided to cut interest rate by 0.25%, that's 0.25%. And they say this is all part of helping the economy to grow, slowing growth. And of course, we've been talking about the tariff and what it's doing and what it could do further to the bloc. So I guess that's why the ECB has decided to cut interest rate by 0.25%. Let's get more from that bloc now with Lars. It's been a rough time for some German companies. That's why this cut in interest rates may help them. Lars, good afternoon. So we hear this cut in your interest rates. Borrowing should be cheaper to help all those companies that have that need shocker for the a buffer for the shocks that come from the tariff and other factors that are hitting them everywhere. But what else can you tell us about this plan by the government at the buybacks to help the small struggling companies to stand on their feet?
Yes, I'd love to do that. However, I think we have, if I got you right here, a little misunderstanding. Maybe it's not the government buying back stores. We're talking about a trend that I just saw in those companies' listings where the companies are buying back their own shares. In an interesting time to be doing such a step, but it is a massive thing. Out of the 40 German blue chip companies, Ini, there's 18 that are spending lots of money right now. If we're looking at Siemens, 6 billion euros they want to use to take some of their own shares off the market. It's the same at DHL, that's the postal and logistics company. Then you have SAP and Mercedes-Benz with 5 billion each. So Ini, we're talking about a lot of money that they are taking off the market here, pending shareholder approval. But it's, of course, unlikely that shareholders would object because they are obviously the ones benefiting from such action. Because if you do these share buybacks, of course, you lower the numbers of shares on the market, and that usually leads to higher share prices and higher dividends. And especially in those German markets here, dividends are really a major factor that's playing into investors' decisions.
Well, so that means these companies are rich, because, I mean, usually buybacks are a sign that the companies have a lot of money.
Yes, it's true. And when you look at it that way, of course, if you have a lot of companies doing these share buybacks, that is definitely telling you something. There is a lot of money there, despite this currently weak economic situation that we're having in Germany. And you know we do, because we've been talking about it often here. We've had 2 years of a recession. We have a weakness coming up for 2025. So why are these companies so strong? Well, I got to tell you, most of it is because, of course, some of these DAX companies are making most of their money in countries other than Germany. For example, if you just look at SAP or so, they are strong because only a fraction of their revenue and profit actually comes from business in Germany. Now, be that as it may, experts are not all thrilled about these stock buybacks, and there's a reason for that, Ini. They fear that companies might want to hold on to some of their money, some of that cash, in this current business environment, which, as we often discussed, is just hard to predict. After all, we're seeing this US-made trade war. We're totally unclear over how it will play out, what tariffs will do to any given company's revenues. We've seen situations in the past where, in a shaky environment, companies had done share buybacks only to find out a little bit later that they would have needed more liquidity because some sort of crisis popped up.
Well, let's leave them for a bit and see what investors are doing in the markets at this time.
Yes, and of course, you just talked about it, Ini. We've had that ECB decision. Still, I want to maybe just move the clock back a couple of hours, starting with the U.S. markets, because they got quite a shock yesterday when they heard from the Fed Chief Jerome Powell saying that he's become a lot more pessimistic about the economy. I wonder why. Talk about tariffs and trade war, but at the same time, he said that the Fed would not intervene and lower interest rates to prop up markets. So So that gave Wall Street quite a shock. So we were a little bit insecure here over the morning trading hours here in Germany, in Frankfurt. What happens here with the ECB? But no such surprise here. The central bank in Frankfurt has just actually lowered interest rates by 25 basis points, and that was exactly what the market had been expecting. And well, it also didn't do much then to move the markets. We were a little bit stronger early in the morning, saw some weakness then, and we haven't seen a change yet. The DAX down about 0.2%, and the reason for that is probably that we've had 3 good days in a row, and we are heading into this long 4-day Easter weekend. So we are seeing some profit taking here.
Yeah, profit taking. I guess investors will need to spend some money over the long weekend or holiday before they get back. But thank you so much, Laz.
Thank you, Ini.
All right, let's see what's happening on our continent. Africa, the Suez Canal generated $39.919 billion revenue from 2019 to 2024. This is despite a sharp downturn in 2024 because of escalating regional tensions. This according to the Suez Canal Authority Chairman Osama Rabi. Annual revenue hit a record $10.25 billion in 2023, but disruptions to global shipping, particularly in the Red Sea, caused a dramatic 61% drop in 2024, with earnings falling to $3.991 billion. Despite this downturn, and traffic through the canal showed signs of recovery in early 2025. March statistics indicate a 2.4% increase in the number of vessels transiting compared to January, while net cargo tonnage rose 7.1%. Revenues for the month also climbed 8.8%. From 2019 to 2024, a total of 121,902 ships passed through the canal, carrying net cargo of 7.154 billion tons. The canal's performance over this period underscores its enduring role as a global trade artery. Remittances from Egyptians working abroad surged by 81% in the first 7 months of 2024-2025 fiscal year. That's from July to January 2025, reaching an approximately $20 billion, and that's up $11 billion in the same period of the previous fiscal year. This data is from the Central Bank of Egypt. In January 2025, remittances year-on-year rate rose 83.2% to approximately $2.9 billion, and that's compared to $1.6 billion in January 2024. The CBE's balance of payments data for early January revealed a substantial increase in remittance inflows by 84.4% to approximately $8.3 billion in the first quarter of the full year 2024-2025. That's running from July 2024 to July 2023 to September 2024, and that's compared to $4.5 billion the same period of 2023-2024. We go to West Africa, where Ghana's producer price inflation, that's the PPI, dropped to 24.4% in March 2025. That's down from 27.6% in February, according to provisional data released by the Ghana Statistical Service. The decline marks a 3.2 percentage points reduction, with a marginal month-on-month change of 0.6% between February and March. The mining and quarrying sector recorded the highest inflation at 35.4%, though this represented a sharp fall from the 43.7% registered in February. The manufacturing sector followed with a rate of 22.8%, an increase from 20.8% in the previous month. At the other end of the spectrum, the information and communication sector maintained the lowest inflation at 4.1%, marginal drop from 4.2% that was recorded in February. Ethiopia's Ministry of Mines has reported that gold export generated over $2.1 billion during the 9 months of the 2017 Ethiopian fiscal year. According to the ministry, a total of 26 tons of gold were delivered to the National Bank of Ethiopia, and that has contributed significantly to the country's foreign currency reserves. The ministry emphasizes on the progress made across various mining projects, with new developments in gold, coal, and cement production now operational, which are part of a broader effort to boost sector's distribution to the national economy. And global rating agency Moody's as investor service has revised Zambia's economic outlook from stable to positive, signaling growing confidence in the country's fiscal and economic recovery. The upgrade reflects sustained progress in reducing government debt alongside stronger economic growth and continued fiscal reforms. In its latest assessment, Moody's highlighted a steady reduction in Zambia's government debt burden, attributing the improvement to disciplined fiscal policies and economic expansion. The rating agency's upgrade follows Zambia's recent successful debt restructuring under the G20 Common Framework, which has eased repayment pressures and freed up resources for critical public investments. The Central Bank of Kenya has said that it will lift the moratorium on licensing of commercial banks on July 1, 2025, which may see more lenders enter the market. The moratorium, which has been in place from November 17, 2015, was imposed against the backdrop of governance, risk management, and operational challenges in the banking sector. The lifting of the moratorium paves way for new players to enter the banking sector, provided they can demonstrate that they can meet the enhanced minimum capital requirement of 10 billion shillings. According to the CBK, the recent increase in the Business Laws Amended Act 2024 of the minimum core capital requirements for commercial banks to 10 billion shillings will further strengthen the banking sector and give solidity and confidence to customers. Still in Kenya, the Revenue Authority has waived 158 billion shillings in penalties, fines, and interest for 2.9 million taxpayers under a tax amnesty program which was launched in December 2024. The initiative, which will end June 30, 2025, has seen the taxman collect $10.9 billion in principal tax payment. According to KRA, the tax amnesty program is meant to provide an opportunity for taxpayers to clean their tax records by offering waivers on penalties, interests, and fines for tax debts accrued up to December 2023. And from there, we say that the African Development Bank has issued $1.42 million to be disbursed to Zimbabwe to support domestic resource mobilization efforts. In September 2020, AFDB approved a $10.05 million loan to Zimbabwe to strengthen domestic revenue collection, an ongoing challenge given the persistent gap between formal and informal sector contributions. The shortfall becomes even more apparent when compared with the Reserve Bank of Zimbabwe's estimate, showing the informal sector generating approximately $14.2 billion annually, highlighting potential untapped tax revenues running into hundreds of millions of dollars. According to an AFDB implementation progress report, $8.62 million of the loan had been disbursed as of April 4, with the project slated for completion in 2 months' time. In South Africa, the country has edged Kenya as the leading venture capital destination in the continent in the first 3 months of 2025, and they attracted $51.85 billion. Kenya came second with $45.63 billion out of the $1.6 billion total funding that was channeled to the continent. In the first quarter of 2025, STARS Private Capital in Africa report produced jointly with the East Africa Venture Capital Association shows that despite the rise in the number of deals, the value significantly dropped. The African private capital market began 2025 robustly, with STARS recording 105 transactions in the period, broadly consistent with the 106 transactions seen in Q4 2024 and significantly higher than the transactions recorded in the first quarter of 2025. Nigeria is not mentioned there, unfortunately, but perhaps we will have a conversation on how to get this startup funding back, maybe the direction of Nigeria amidst all of that. So we saw that Nigeria is not one of the first three, unfortunately. Let's see what's happening in the crypto space this afternoon. So I see a green color right there, but how green, that's another question, yeah? But I guess we should just be satisfied that we have a green color. So that means in the last 24 hours that the price of Bitcoin increased by more than 1%. It's now at 84. But I think sometime yesterday we did see Bitcoin hit 85,000. But it's now back to 84 right there. And Ethereum is also up, going past the 1,005, 1,006 there, 1.21%. XRP, more greens I see is what we have here. But let's see some headlines before we head into the conversation arena. So the first is Ethereum fees hit a 5-year low. Is that to attract more transactions? Ethereum transaction fees dropped to a 5-year low, now averaging 0.168 dollar. That's less than $1. This decline is attributed to reduced blockchain activity with fewer users engaging Ethereum transfers or smart contract interactions. So analysts believe that global economic uncertainty is holding traders back. However, there's hope that the upcoming Petra network upgrade could boost Ethereum's usage and lead to higher transaction volumes in the near future. I guess if it's less expensive, we could have more people go that way. The other story is on Dogecoin. Dogecoin could hit $2.5 by 2030, and then it will have a major crash. That's what a report suggests, that it could reach an all-time high by 2030, and then it would later have a bearish reversal that's expected to follow after that. I guess that's natural. Profit taking will obviously set in, potentially dragging Dogecoin to a prolonged downturn. The price is likely to bottom out by the end of the third quarter before attempting a slow recovery eventually. That's for Dogecoin. If you're an investor or you want to go through this journey with Dogecoin, I guess you can follow that. Then also the United States Securities and Exchange Commission will hold its third crypto policy roundtable April 25. That's next week. Of course, it's going to happen in Washington. It's a significant one. It addresses regulatory clarity in crypto custody, potentially affecting important market frameworks and regulatory pathways. So that's April 25th. You want to mark the calendar if you're interested in that. But let's have a conversation now with Chimezie Chuta, Chairman, National Blockchain Policy Steering Committee. Hi, Chimezie. Good afternoon. Welcome to the program.
Yeah, good afternoon. Always a pleasure to join you.
Great. So
hope you're doing great today.
I'm doing great. Thank you so much. So what's responsible for the green color that we see this afternoon? Hello, Chimezie, can you hear me? Wow. That was obviously a network glitch right there. I hope we can have Chimezie back to tell us his thoughts on, first of all, price action and what we're seeing, what we could expect. So we're going to a long weekend, and we heard last there from Europe. We saw that profit-taking seems to be in, and that's why I was warning Will that investors, when they count the number of days they'll be at home, perhaps they could just decide to take some profit. So maybe that will set in, you know, at the crypto. But for now, we saw that green color on the board. And then, of course, we haven't heard how many days now? I think, it's not up to 48 hours yet, yes, since we haven't heard new pronouncements that could affect, that's from President Trump. But we see the market, of course, very fearful. So many things happening, not just for the crypto markets being fearful. I mean, all the markets are fearful at this time. Uncertainty is not friends with anyone, so we can expect that. So yes, we saw that Bitcoin price at 84,000. Ethereum gone more than this. It's about 1,600. That's what we had there. And BNB, Cardano. But the good thing is the signs here are plus, so we expect it's a green market now. If today will be treated as a Friday, that's another thing. We do know that crypto does not go to sleep. So even though it's going to be a long holiday, there's no holiday for traders in the crypto market. So we'll see how that goes. Do we have Chimeze back? Hello, Chimeze, can you hear me?
Yes, I can hear you. Sorry about that break. It was network.
Yeah, we saw that. So I was asking what is responsible for the recovery, well, no matter how slight it is, in the crypto market this afternoon.
Yeah, so personally, I don't think there's a recovery yet. The market is still responding with uncertainty to all the tariff wars. We saw yesterday that the U.S. moved their tariff against China to 245%. And we're also seeing that China is continuously proving itself to be resilient enough to face whatever numbers that the U.S. throws at them. So the market generally, if you are an investor at this time, you're not necessarily going to make any big move. What's going on here is we see scalpers and they traders taking advantage of the volatility of the market to move. So currently, I don't see the slight movement from 83 to 84 as any significant increase that says that we're back into the bull market at all.
Okay, but I wonder when we can say we are back in the bull market. Do you see perhaps adjustment to the new normal and investors just accepting the fact that, well, this is the new normal now, so let's just move on and maybe work with shorting and longing as ways of staying active in the market?
The very first thing investors value more than anything, more than profit, is the protection of their capital. It's more important than the profit that you want to make. So in times of uncertainty, the best way to respond to is actually to stay out of the market until there's a clear fundamental that can prepare you to make any kind of investment decision. So as at this time, as long as there is no certainty, because remember that there's this rumor that Trump gave a 90-day holiday for tariff wars. That 90 days is still a 90-day of uncertainty. Okay, so we can't even begin to expect a market direction to change until that 90 days expires, because crypto was doing very well when the government was not involved. But suddenly the government are in, and crypto is now responding to government news, government policies, and government action. It was not meant to be that way. Satoshi Nakamoto did not envision that the day will come when government once again will hijack the Bitcoin protocol and begin to use it as a tool to political gains and favors for themselves. So there's still a long way from where we are right now before we can see a total recovery from the market, as it were.
A long road to recovery or before recovery. Chimeze, thank you so much for sharing your views with us. Chairman, National Blockchain Policy Steering Committee, Chimeze Chuta.
Thank you so much.
Long road to recovery or long road before recovery, which of them fits into your own perspective? Well, whichever, we're here on business programs to report and bring them all to you. Tomorrow is Good Friday. I'm sure you're ready in a holiday mood. Well, I can't afford to do that. Gladly so, I'll see you again tomorrow on Business Morning and then on Business Incorporated. I'm Ini John Mekwa. Enjoy the rest of your day.